Visa is one of the most profitable companies in the world when measured by the operating profit margin. It's certainly the most profitable company of any of the ones that I'm following. That operating profit margin is a result of several advantages Visa boasts. And understandably, investors are interested in Visa stock and they want to know if it's a buy at current prices. I'll answer that question in this video, looking at Visa's revenue growth, its operating margin, its return on invested capital, and then sharing with you my discounted cash flow valuation model, which calculates what I feel Visa stock is worth today. I'll do all of that and answer the question if I think it's a buy at the current price. Let's start with revenue growth.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
Visa reported revenue growth of 9.8% in the most recent quarter, which is above where I think the company will grow over these next few years. Visa's not going to grow revenue very quickly. It's not going to double its revenue overnight, but it does give investors a nice exposure to worldwide economic spending. It also benefits from rising inflation to some degree because Visa earns revenue as a percentage of every transaction that uses the Visa payment system. And so as nominal prices increase, total revenue increases for Visa, and all while its costs remain relatively stable. So that's the reason why a lot of investors are attracted to Visa stock, because it's a more defensive investment compared to other companies that are more exposed to cyclicality in macroeconomic growth. Visa is exposed to cyclicality to macroeconomic growth, to be sure. It's not like one of those healthcare stocks I talk about, which are almost unrelated to the macroeconomy. But Visa is less exposed compared to companies like Macy's or Tesla, which are very cyclical businesses. So as I shared with you, Visa boasts the best operating margin of any company that I follow at 66%, although Nvidia is approaching quickly to try and take the lead here from Visa. Nvidia's operating margins have quickly surpassed 60%. Visa, although, is more consistent in generating operating margins above 60%, while Nvidia only recently has it earned those levels of margins, and it's questionable whether it can persist and retain those margins over the longer term like Visa has. Visa's generated this margin for over a decade, and it's actually expanding that margin. If you look at the beginning line of 2015, it was around 64, almost 65% in operating margin. It's now up to 66%. So it's trending higher, even though not by much. But when you're earning margins of over 60%, any trend line improvement is excellent, because at least what investors can feel good about is that it's not declining. And we're happy with operating margins over 60%. I know I'm happy as a Visa shareholder as long as the company generates margins anywhere near 60%. Those are excellent margins for a business with these levels of growth prospects, competitive advantages, and exposures to worldwide economic growth. Unsurprisingly, the company's returns on invested capital are also excellent at 33%, and they've moved phenomenally higher over the previous decade, from around 18% or 20% in 2015 all the way up to 33%. Returns on investor capital measure how good a company is at taking investor money, turning it into products or services that generate revenue and profits for shareholders. Visa operates an asset-light business model. So part of the reason why Visa's returns on invested capital are so strong is that the business generates very strong net profit margins, and at the same time, the business doesn't require very much capital to be invested. And so that difference between the lower capital requirements and very lucrative profit margins generates great returns on investor capital. I suspect that Visa's returns on investor capital will maintain at a very high level, if not increase, over these next few years. Another important thing to consider with the return on investor capital is to compare it with the company's weighted average cost of capital. As you see on this spreadsheet here, I've calculated a discounted cash flow valuation for Visa. Included in every one of my discounted cash flow valuations is the calculation of the weighted average cost of capital. For Visa, that number is 9.76. And if you recall, the return on investor capital was over 33%. So the company boasts an ROIC to WACC ratio of over 3, which is excellent. And I suspect that will continue on that trajectory for the very long term. So the intrinsic value per share I calculated for Visa is $344.81, very close to the current market price of $343.67. By the way, if you want access to these calculations, you can get them if you join my channel as a member at the investor tier. So I also look at valuation on a multiples basis, and for Visa, I looked at the forward price to earnings ratio, and at 27, it's near the higher end of where this business has traded for in the last year. Although not by much, the average valuation in the last year is around 25, and at 27, it's not that much higher than it usually is. And for the forward price to earnings ratio at 27 for a business with these prospects, I would say is fairly valued. And then as we saw in my discounted cash flow, the intrinsic value per share was almost precisely equal to the current market price. So this is a clear indicator of Visa's valuation being fairly valued. It's not cheap, it's not expensive, it's fairly priced. And what I usually say about fairly priced businesses is if the business is an excellent business, which Visa is an excellent business. I have Visa in the Hall of Fame of businesses because of its competitive advantages, because of the operating profit margin, the asset-light business model, the connection to macroeconomic growth, the partial hedge against inflation you get, all of which means Visa is just an excellent business. And I say that I'm always willing to pay a fair price for an excellent business, which is what you're getting with Visa, an excellent business at a fair price. And I think investors over their investor lifetimes, if they buy excellent businesses at fair prices over 10, 20, 30, 40 years, I think you'll be very much wealthier than you were from when you started that strategy. So to answer the question I posed in the beginning of the video, do I think Visa stock is a buy at current prices? The answer is yes, and I updated that recommendation here on March 6th, 2025. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.